Last morning, yesterday, ma'am gave the shortest speech in last 4 years of 1 hour 31 minutes to be precise. So I also been told to keep it very crisp, and actually we don't need more than 25 minutes to talk about the budget, as you all know. But one thing is that what was not covered, few of the announcement was not covered during the speech. We came to know during while we were going through the memorandum of budget and the finance bill 22. So I'm going to present few of the things which are already covered in the speech, and some of the things which are not explicitly covered in the budget speech. So here we go. So if you would have been watching the news since yesterday, one thing would have common: growth. Yeah, so let's start with the growth story. FY22 GDP seen 9.2%, FY23 projection 8 to 8.5%, which place India for next 4 years in the world fastest growing economy. Planned fiscal gap for 22-23 is 6.4%. And the another good news is that highest GST collection of 1.40 lakh crore since the launch of GST. Yeah, since when the GST launched few years back, this is the highest collection ever in the history of GST. Government has also planned 15 lakh crore of borrowing. And if you would have observed that market closely yesterday, then you would have seen there is a bit spike in the yield, and that is the reason because government is going to borrow heavily this year, which is approx 40% higher than the last time. Okay, so you would have come across many memes, but let me tell you, if you would have followed my last year budget, and if you recollect, some of you recollect, this is the exact slide of last year. Outcome, no negative is big positive. I think most of you will agree, right? No change in tax slabs, no change in rates, no new exemptions, deduction, no tweaks at all. But also on the other side, people were expecting there will be a COVID cess like last time, wealth tax, increase in capital gain tax, increase in surcharge, and what not, right? But nothing has happened. So it was a complete status quo. The good news is that we don't need to remember another slab or another sections or on the limits. So it's quite simple. Another good news, and it's on the serious note, is that we are not confident enough, or we might be not happy that much with the budget because we might be expecting some change in that. But to be very honest with you friends, I can tell you as a CEO, it's good that you don't need to change few of the core things every year just because budget is there, right? So it shows that stability of government and stability of the government policy, which adds lots of confidence for FPI and institutional investors and other big investors who are looking at India for investments. So it's completely fine if nothing has changed and we don't have much to discuss. But don't worry, there are a few things which definitely you know, and some of the things you are not know, which we'll cover in next few slides. Okay. If you see the growth and if you see the sustained recovery, it will add a bit more confidence on India and equity market in next few years. If you see the first graphic shows the net addition in EPF subscribers in lakhs. So you can see the drop in first lockdown and second lockdown, but how well it has covered. The recent was 13.9 lakhs new subscriber to EPF. This shows confidence in the job market and employment. When it comes to vaccine coverage, around 93% of adult population of India already completed the first dose, and around 70% of the adult population has covered with both the dose. And forex reserves are at all-time high again during the last year, in the current year as well. See, budget is nothing but, as you know, how much revenue government is going to get through various sources and how government is going to use in next financial year is what typically we all know budget is, and the same applies to government also. So now to earn 1 rupee, how government is relying on a particular subsections are from income tax, they earn 15% of the revenue, from excise duty 7%, corporate tax 15%, GST whopping 16%, custom 5%, non-tax revenue 5%, and 35% from the borrowings. As I discussed, 15 lakh crore of the money is going to get borrowed this year. Non-debt capital receipt is 2%. Now, once they collect all this, how they are planning to spend it? Central sponsored scheme 15%, finance commission 10%, stats and taxes, duties, whatever share is, it's 17%. Interest payment, whatever loan government took, they need to pay interest on that, which is 20%. Defense 8% spending, subsidies 8%, centrally sponsored scheme 9%, and pension 4%, and other miscellaneous expenditure 9%. Now, this is again a crucial point, and which is this is the slide and this is the announcement. I think market cheered a lot. People were expecting since long government should prioritize on the capital spending. They should come heavily on that part. That will bring lots of confidence to private player also to get into the capital expenditure. So from 2019 3.1 lakh, we are at 7.5 lakh now. If I compare with the last year, it's around 35.4% increase in capex. This shows government is one hand trying to balance between the fiscal, at the same time they are going heavy on capital expenditure. And so frankly, if you ask me, it's good news that there is no hike in any kind of taxation. So it's still, I believe it's a good news, though we don't have so much demand at ATC, increase in the ATC limit and increase in the standard deduction for salaried and all that thing. But I believe looking at the fiscal number and capital expenditure they are going to do, it looks quite amazing that they are maintaining this balance and they are not increasing any further liability for the taxpayer. Okay, but the limelight has stolen by this particular piece, tax on virtual digital asset. I think we all are aware. I know I don't need to emphasize on this part, but what we're going to see today, right now, in next 5-10 minutes, is the nuances of this particular virtual digital asset taxation. Okay, so I'll try and decode a particular piece with example. So I would require your greater attention in this. If you have any doubt around this, we'll try to address this on the group or if time permits in the session itself. So virtual digital asset, as you all understand, it's in as per the finance bill, it is quite inclusive definition, which means everything related to crypto and NFT or anything related to blockchain technology, all are will part of virtual digital asset. So if something which is specifically not excluded, everything is included. So government will only say that these are not included. What are not included? They have given few of the examples like digital gold. They have not included the digital rupee they are going to launch. And this kind of particular things have kept aside. Rest all will be part of this. But of course, for our understanding, it's crypto and NFT. When the tax will start applicable, which is at 30% plus surcharge from 1 April 22. This is one of the things when many people have query. Let's say even if the income is below basic cost of acquisition, which means if I'm let's say I'm buying a Bitcoin for 1 lakh and I'm selling it for 1 lakh, only I can deduct the cost and no other expenses related to that. It can be a brokerage, it can be charges related to particular thing related to that, but only cost is allowed as a deduction. So no basic exemption is a great takeaway, I would say. Loss on sale of digital asset cannot be set off against any income or carried forward to subsequent years. Frankly speaking, if I want to relate this with any other existing provision, it's like winning on lotteries, gambling, and all that thing, winning of prizes where flat 30% tax is applicable and no loss can be set off. So if you see that, for example, let me just take you for 2 minutes away from the crypto. Let's say I'm buying a lottery, and in one lottery, for example, let's say I'm doing some kind of horse race gambling. Okay, now if I have a 1 lakh rupees loss and 2 lakh rupees of gain, I can't set off that 1 lakh rupees of loss. And this is the same way. Okay, government is saying that for the crypto. So they are trying to penalize this kind of investments or trading. No indexation will be allowed. TDS. Also, they have introduced TDS so they can capture the most of the transactions. So 1% of the TDS is applicable. Please note that TDS is applicable from 1st July 22 and not from 1st April 22, because they will issue some guidelines how it will be collected. I had a few queries regarding that. How, for example, let's say I'm individual, I might not have a 10 to deduct the TDS of a particular person. Then how it will be monitored? You know that in the property also, if one buy property more than 50 lakh, then they need to deduct the TDS. So something, that kind of arrangement they will come up with, that's what it see. But there is 1% TDS deduction rule is there. And there are certain conditions also when it comes to individual and HUF, amount should be higher than 50,000 and all. So one will need to see in the greater detail. Another point, even if someone is giving gift of crypto to A to B, in this case, B, the recipient is liable to pay the tax at the rate 30%. Now, I think most of things you might be aware or you might have read since last evening, because many news has covered this. But let me go ahead and share few examples for a greater understanding of this particular provisions. Let's see a 2 to 3 case studies around this, because I believe that this is the main announce we all might be interested into, and some of your client or you also will be interested and concerned with. So let's say Raghav acquired 5,000 rupees crypto in July 22. Okay, and now in August 22, after a few months, August 22, the price of crypto is 65,000, and he sells that. So after July, the TDS is also applicable. So 650 rupees will be TDS, 1% of the sales value, right? So sell consideration is 65,000. Only one thing is allowed as deduction is what cost. So 5,000 I have deducted from 65,000. My gain is 60,000. 60,000 minus 5,000. So now on 60,000, I will pay 30% plus surcharge, which is 30.4% as a tax. But out of the 650 already collected, so I need to pay in my income tax return 18,070 rupees. Is this clear? So now, two things: no basic exemption limit, only cost allowed to be deducted is the cost of acquisition, which is 5,000. 1% is TDS, is part of that 30.4%. So few clarification if you already have something related, some related doubt in your mind. So this is for that. Now, I believe, according to my understanding, and see, whatever I'm going to discuss, please note that I haven't given, though it always goes in case of tax, this is as per my understanding, and this is how I have interpreted. Of course, we have done our due diligence, and with help of some other friends in the industry, we have come out with this kind of understanding. But still, I would suggest that even if you're going to take some actions, please consult a taxation expert if you feel so or if you wish so, but don't consider this as advice. This is a pure for information purpose only. Yeah. So why I'm giving this disclaimer? Because see, some of the things will be clarified in near future, because this is applicable from 1st April. So still we have time, and this is just a one day since budget has come. So this is our interpretation. Now, so if we are go by normal procedure, and let's say let's in this case, Raghav Kapoor is holding, he will pay 18,720 tax. Now, according to me, there is some tax planning possible, and let's see how it is possible. Okay. Now, I am saying that current provision is such that though it's not given by government as of now, and that's why it's first time introduced how the crypto is going to tax, but the current understanding of crypto taxation for the financial year 21-22, which is going to complete on 31st March 22, in next 2 months. What is the understanding? Whatever gain you have right now in this current year will be charged to capital gain. And this capital gain will be as per the, you charge for the gold, you charge for the debt funds, etc. So till 3 years, short-term capital gain charged at your slab rate, more than 3 years, 20% with indexation. This is I'm talking about before budget and applicable even after budget, but applicable for financial year 21-22. I hope it's clear. Now let's see what we can do and what is the tax planning possible according to me. Okay. Now let's say crypto, which you got in this example, which Raghav got for 5,000, the current price, which is on today or tomorrow, is around 45,000. Now I would say that if that particular person is my client, I would suggest that 45,000 is the today's price less 5,000. So his gain is 40,000. I am considering that, assuming that that person is having an income less than 2.5 lakh rupees. So he should ideally sell this crypto before 31st March and buy back it again if you wish to hold it for the future purpose. So what will happen? Let's see. So now, assume that cryptocurrency is valued at 45,000 on 3rd Feb. Raghav should transfer crypto A 45,000 and book profit. If he wants to continue holding the crypto A, Raghav must acquire it again prevailing price at 45,000. So as on today, I'll sell it 45,000. 5,000 will be deducted. So 40,000 is my gain. Now 40,000 is less than 2.5 lakh. And there is no other income. It will be tax free. But now, as I'm buying it again at 45,000, when I sell next year, my cost will be 65,000 and 45,000 will be cost of acquisition. So by selling today, I have inflated my cost. Okay. And I took the benefit of the current provision, which are not very clear. So there are two stances. People are saying that if it's for a trading purpose, it should be charged 30% flat. Okay. I'm talking about the before budget announcement. And one stance is that it's for investment, you should charge it as a capital gain. So I'm going for a alternate stand, which is for the investments and capital gain is applicable. So this is the provision. So 65 minus 45, so 20,000 is the gain and 6240 is the profit. So according to this, if I don't plan anything, I'm holding 5,000 rupees crypto and selling in 65,000 in August, I need to pay 18,000 tax. But if I do a planning, I need to pay only 12,480 tax. Now, case study 2, again, on the rules we already discussed. Now, let's assume that I'm holding two cryptos, crypto X and crypto Y. In one crypto X, I am having a gain of 50,000. In crypto Y, I have a loss of 35,000. Gopal understand in this example that as he's having a net gain of 15,000, his tax payable is only on 15,000. But again, this is debatable, but according to me, only it's not on only net element they need to pay tax, but the loss they have incurred, which is of 35,000, is completely ignored by income tax. So whatever gain is there, 50,000, flat 30% tax is applicable on that. So he needs to pay 15,600 on 50,000 and not on 15,000. I hope it's clear. Case study 3, it is related to gift. Let's say Deepan acquired 100 units of crypto at 1 lakh, and out of that he give gifts of his friend Ramesh and Ramila worth 60,000 and 40,000. So though gift is also taxable, but less than 50,000 will remain non-taxable, and on another 60,000 Ramesh has to pay. On whole 60,000 Ramesh has to pay 30.4% tax. Yeah, so that's on crypto. There can be few more case studies. I'll try to cover that in blog in next few days, or with the same in greater understanding you can read about in my blog. I'll share with you all on the Network FP platform. Few of the other important changes, and for some of these changes, I would like to thank CA Arvind Rao. Yesterday, after the budget, he read about the memorandum and finance bill, and he came out with 9 points, which is hidden in the speech. And some of this I also came across. So I would like to thank Arvind Rao for highlighting few of the changes, and due credit to him. So other important changes. Now, you might be wondering, and many people were asking that, what if there are some COVID-19 expenses which are borne by the employer, and some of the money received by the person, जिसकी family में किसी की death हो गई है, but the money received is related to crowdsourcing, and the amount received either is from employer or crowdsourcing, it should not be supposed to tax. So actually many of us might have missed. In June 21, press release is already given on this part. Any sum paid by employer to employee in respect of expenditure incurred by the employee on his family medical treatment relating to COVID-19, subject to some condition, would not be taxed as perquisites. As you know, whatever employer gives as kind is also taxed as perquisite, or some amount given by is also charged as perquisite over and above the salary. But this budget has clarified that, though there was some explanation already in June 21, but this budget 22 has clarified that there will be no tax on that part. And this is effective from 1st April 2020. Now, another thing, money received from crowdsourcing. You know that many people were having financial difficulty, and they got some amount from various sources, from friends, family, and there are some Impact Guru and other website where people has sourced some amount. That also remain tax-free for the assessee, or in case of assessee died, for the family it remain tax-free. And this is the biggest change related to COVID expenses and relevant amount. Now, some of you might be wondering, when madam yesterday spoke about the surcharge on capital gain. See, many of might have not came across this, because this is related to super rich. So there are already, if you are aware, there are already this kind of surcharge. If your income is more than 50 lakh to 1 crore, 10% is surcharge. This is over and about 30% plus whatever education says and other says we pay. So 10% is surcharge on 50 to 1 crore, and 1 crore to 2 crore, 15% is the surcharge, 2 crore to 5 crore, 25%, and so on. So now what this provision is saying, that 15% cap on surcharge on long-term capital gains applicable to all capital assets. So existing provision related to this surcharge of maximum 15% is already there. Yes, there are some confusion. If your income is more than 2 crore and Some of this income includes short-term capital gain on equity, long-term capital gain on equity are already restricted to 15% of surcharge. What this budget is saying that even if any long-term capital gain, now this long-term capital gain can be out of transfer of house, in case of unlisted equity, in case of selling a gold, any long-term capital gain applicable will be supposed to cap at 15%. So in short, this 25% will be restricted. This 25, 37, 37% will be restricted to 15% only when that total income includes long-term capital gains applicable to this particular asset class, and that includes everything now. Unlisted equities, gold, and all that. Earlier, it was only short-term capital gain on equity and long-term capital gain on equity. Okay, so this is the changes. Now, I believe you all are aware about the bonus and dividend stripping. Due to a paucity of time, I will not be able to explain the full provision of bonus and dividend stripping. But if you want, I have already highlighted that, or you can just Google about bonus and dividend stripping. So earlier, this existing provision was already there for equity shares only, bonus and dividend stripping. Now it has been also said for Invest IT, REIT, and AIF. That's the only change. Another point which all are celebrating is that allowing taxpayer to file updated return within 2 years from the end of assessment year. I think this is the only sentence told by FM in the speech, but if we decode that, what it means. So you can file belated return till 2 years from the end of assessment year, which is for 31st March 22, the assessment year is 22-23. So 2 years from then, which is 31st March 25. So that is how 2 years is calculated. Now the catch is you need to pay 25% additional tax. If you're paying already, let's say you're on the 30% tax bracket and you are disclosing some income which you have not disclosed earlier. So this is basically for the one who escaped some of the income and now they want to show the income, they need to pay additional tax of 25% if they are revising return within 12 months. They need to pay 50% additional tax if they are revising return after 12 months. Okay. And so if you think that can you revise the return if you forgot to claim some exemption or deduction? No, because updated return cannot be filed if original return was for loss. Updated return cannot be filed if it decreases the total tax liability. So this is only if you have forgot to disclose some income and now आपके अंदर का वो इंसान जाग गया है या loyalty आपको दिखानी है, or you think that if assessing officer will catch this, I'm gonna have to pay 100 to 300% penalty. Let me just pay 25% additional and 50% additional tax and let me show this income. And this is changes is for them. Now, another related to NPS. If you have some doubt about this NPS, for most of our client, it will not be applicable if they are in the private sector. So this is different section than 50,000, which I and you and all employee can invest in the NPS and can take the tax break. But this is related to when employer pay NPS out of your whole CTC, then up to 10% is allowed as NPS. And this limit is for 14% for central government already. Now they just introduced this for the state government. So there is no change for private sector, but yes, state government employees benefited out of this. This is again the not much noticed by many, but this is something like that. Many a times, many of our clients are claiming 80G deduction. Priya, I'll take 1 or 2 minutes more and I'm about to finish. So many of us taking 80G deduction, and sometimes you might have come across many people are just disclose the 80G even if they have not incurred. So maybe this is a bad news for them. 80G deduction claimed by donor will be disallowed in case of donee. Research institute, university, college, or other institution fails to furnish the statement of donation. So now you know there are AIR already available with the government. They are giving some alternate form to trust that whatever donation you have received, you show us the detail. So if let's say Nitesh is saying that Nitesh has given X donation to this university, and in this university, donation of Nitesh is not reflected, then Nitesh will not get the 80G deduction. This is applicable retrospectively from 1st April 21. Higher TDS TCS. Now, higher TDS TCS rates shall apply in case of certain specified person who have not filed tax return in immediately preceding year. This provision also introduced last year. If you have not noticed, let me just spend 30 seconds and let me tell you that there are certain specified person who have not filed return in the last 2 years. Then, for example, let's say a person needs to deduct TDS at the rate 10% under professional fees. If I'm paying professional fees to someone and I need to deduct 10% fees for them, and now that person has not filed return for last 2 years, then I need to deduct TDS at 20% instead of 10%. So now this provision is amended, and now government make it more stringent. If the person has not filed income tax return even for the 1 year, his tax deductible TDS will be deductible instead of particular person to 2x. So if 1% TDS applicable for, let's say, contract, it will be 2%. If 10% applicable, it will be 20% for them. So again, these are the main changes when it comes to this. And on the digitization front, we all know digital rupee using the blockchain is around the corner. In 2022-23, we can see some announcement on that. A great step on financial inclusion, 100% of post office to come under core banking system. Many have not given due importance to it, but please see this: access to accounts through net banking, mobile banking, and ATMs, online transfer of funds between post office accounts to bank accounts. I would say that's a great step on financial inclusion. And the last but not least, scheduled commercial banks to set up 75 digital and digitalization. That's it, friend.